Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate reports so you don't have to, and maybe, find a few hidden electric surprises along the way. Today we're diving into LiveWire Group's annual report. Think of it as the report card for this electric motorcycle company. They're trying to rev up the electric motorcycle market. But spoiler alert, it's not all smooth riding. LiveWire is the electric motorcycle division that used to be part of Harley-Davidson. Now, it's its own publicly traded company trying to make a name for itself. They make electric motorcycles and also those electric balance bikes for kids called Stacy. For 2024, LiveWire's main goal is still the same: to make things cheaper, invent cool new products, and grow the market, selling electric motorcycles and balance bikes across the globe. The company's financial picture hasn't been pretty for a while, so it's a pretty difficult endeavor. They lost almost $94 million. That's a big number, and it makes their path to profitability look like a long and winding road. Now, let's talk about the bumpy road ahead. LiveWire faces a lot of risks, and they're not shy about laying them out. One of the biggest, they're still a new company, so it's hard to know if they'll succeed. They have been losing money and expect to keep losing money for a while. They need to come up with new products that people actually want to buy, and they need to do it without breaking the bank. Another big worry is getting the parts they need to build their bikes. If the cost of materials like batteries goes up, or if there's a shortage, that could really hurt their business. And of course, there's competition. They are not the only ones making electric motorcycles. Big names like Harley-Davidson and new startups are all fighting for a piece of the pie. Speaking of Harley-Davidson, their relationship is tricky. LiveWire depends on Harley-Davidson for a lot of things, but Harley-Davidson could make decisions that hurt LiveWire. It's like being in a band where one member is way more famous. LiveWire also relies on other companies to manufacture their bikes. This could be a problem if those manufacturers don't deliver on time or meet LiveWire's standards. LiveWire needs people to want their bikes. If they can't build their brand and get people excited, they're going to have a hard time selling anything. If people like customers or experts start doubting them, it will get even harder to get people excited for their motorcycles. Like any car and motorcycle maker, LiveWire is facing a ton of rules about safety, emissions, and more. If they don't follow those rules, it could be expensive. It also takes a lot of time to design and get electric bikes out the door. Delays with their vehicles could cause some problems. And if their products don't work well or have problems, that could seriously hurt the brand. There is no guarantee the motorcycles will be what the customers expect, which could hurt them severely. If not enough people can easily charge their electric vehicles, this would cause a huge problem. Expanding to sell internationally can be very difficult, and it's very hard to adapt to different regions, which can be troublesome. The batteries in electric vehicles lose their oomph over time. This may cause hesitation when the customer sees that electric motorcycles and balance bikes don't last. Also, LiveWire wants to do things that are good for the environment, society, and how they run the company. That's the whole ESG thing. But if they don't meet expectations, people might get upset. The company needs to look at how all the new climate laws will affect their costs to produce electric motorcycles. Data privacy is also a big deal. The company have to protect customers' data, and if they mess that up, it could cost them big time. Plus, they need to worry about hackers breaking into their systems, which can hurt a business since it can result in a loss of money. If any company believes LiveWire is stealing their ideas, they could sue, which is very costly. Overall, there is a lot of rules and regulations, such as electric motorcycle tax credits, that can heavily change the market, which can ultimately cause damage to the business. Even LiveWire competes with Harley-Davidson, which is still the majority shareholder, which may cause some problems in the long run. They need to successfully separate the LiveWire business from the Harley-Davidson business. If they don't, they could cause financial problems. What's bad for Harley-Davidson may also be bad for LiveWire. De-SPAC transaction NASAs. There has been government focus on such deals, and we may be subject to government scrutiny, which could affect our stock. They need to make sure the business is actually reporting the numbers correctly, and they may fail this. Public health scares and natural disasters and wars could still affect them. Even weather may affect the sales of their motorcycles. Ultimately, it may be difficult to retain great management because of how hard it is to actually make money and make those retained members to work for the company's success. Now, let's take a peek at some numbers. 2024 revenue was $26.633 million, down from about $38 million in 2023. Electric motorcycle sales for the year came out to $7,644,000, and parts, accessories, and apparel had a volume of $737,000. As for Stacy, electric balance bikes came out to $14,043,000, while parts, accessories, and apparel was $4,209,000. The electric motorcycle segment lost $105.5 million. The Stacy C segment lost $4.8 million. They are paying less in income taxes, but ultimately that may not be a good thing because their inclusion in HD's consolidated group may result in HD utilizing certain tax attributes that LiveWire generates, including net operating losses. And LiveWire will receive no compensation from HD for the use of such attributes. LiveWire currently has 182 employees, with most in the United States. They want to create a challenging and collaborative environment so people will want to work there. Patents, trademarks, and trade secrets are crucial to their company and its value, so they're trying to protect that intellectual property. Now, let's get to the financial statements. Diluted net loss per share has barely changed since last year. It has only gone from minus 0.54 to minus 0.46. As mentioned before, electric motorcycles had a negative gross profit of $18,637,000. Sales have generally decreased, with the only notable source of improvement in profits being a $6,126,000 non-recurrence of provisions and long-term planning. The Stacy electric balance bikes had a gross profit of $5.8 million, which still is good, but much lower than the $9.9 million in 2023. Also, if interest rates keep going up or financial service providers tighten lending standards, customers may not be able to obtain financing. The company has an IT incident response plan which is designed to protect against, identify, and evaluate cybersecurity risks. There is also no part of the company that is not allowed to be inspected by the Public Company Accounting Oversight Board. All in all, LiveWire wants you to think about all the angles, but not trustingly. As a final reminder, these reports are based on certainties, and uncertainties in the market could drastically change any and all results. Now, what's my take? LiveWire is definitely facing an uphill battle. They're in a tough market, they're losing money, and they rely heavily on Harley-Davidson. While the new leadership and focus on cost cutting are positive signs, it's hard to ignore the financial realities. It is likely, but not very, that this can change. Based on their low value and price earning ratio, a reasonable range to buy would be from $2 to $2.75. In conclusion, if you aren't a true believer, I would keep away, giving it a slight bearish tilt. We will see if it is any different this time. Thanks for watching. If you enjoyed this analysis, please subscribe for more corporate deep dives. Let me know in the comments what company you'd like me to decode next.